Everyone, we will be with you shortly. My frame rate sucks today. Oh, let's turn the music down a little there. As usual, everyone, as we get the great streaming machine up and running, if you are watching on YouTube and want to on your mobile device and want to multitask, switch over to a LinkedIn app, and we'll be on LinkedIn. Just search up Thomas Hurley there or DYOR Media. You will find me, and you can put that in the background and listen to us while you multitask. Welcome everybody, just getting started here. Just give us a few minutes to get the streams up, get things going here. For all of you that are joining us, please comment. It helps the comments that get posted right in the beginning of this help dramatically. Welcome everyone. Please post, share, comment, follow, like, whatever. Just do it. Let's see, does it post to LinkedIn? No, it doesn't post to LinkedIn, of course not. All right, everybody, welcome on LinkedIn. We got things going over here. We get started in just a minute here. We've got Pedro Garcia with us today. Let's see if we can get the comments up. Yes, welcome everyone. Please post, share, comment, follow, like, whatever. Just do it. All right, everybody. We're gonna, as I always like to say, we're gonna get this show started. So let's do it. Welcome, everybody. Welcome to DYOR Live. It's October 24th, 2023. I flub that date all the time because at this point in my life and at this point in the year, every day goes by faster than the last. I know it's a shtick I use every time, but it's a good one and I like using it. Anyway, my name is Tom, otherwise known as Striking, here on the digital media, in the digital media world. I'm so glad to be hosting DYOR Live on the DYOR Media Network for another day and another great show of stuff, of all the craziness going on in the markets. And we'll get to the point this week. I got Pedro Garcia, the crypto chart analyst, with me. Pedro, what is happening?
Hey, brother, how you doing? Things are well?
Good. We're getting close to Halloween, and there's all sorts of good news suddenly out there in the market. Everyone thinks there's a super pump going on, but really we've got some not behind the scenes, but some larger issues talking about the U.S. economy. The title of today's show is the economy, the Harbinger Cometh, and the Harbinger Cometh kind of reminds me of an old West Wing title. If maybe you fans out there used to watch West Wing, but it's an Aaron Sorkin style title. But the thing, all is not going well in the U.S. economy, and it's not the economy's fault, as I like to say. The economy is cranking along. It's trying. Americans are trying as hard as they can. Our dollar is accepted around the world and being used, but it's being beaten up. It's being beaten up because the U.S. administration here, between Joe Biden and Janet Yellen and the U.S. Congress, they've got the money printer going. Brrr, it's a brrr. What's that sound you hear, Pedro? You hear the money printer?
It makes me mad.
They've all got money guns. Yeah. They got that money gun. Shooting the money gun out.
Money for you. Money for you.
Yes,
money
it's
for
like Oprah. Everyone gets $1 million today.
Except Americans.
Right, except Americans. We got to pay. And so printing too much money, and also they're becoming very, very restrictive with sanctions and other kind of surveillance powers that they're putting on the U.S. dollar and on U.S. citizens that restrict the economy and restrict movement of money, and all of that is bad. Bad for the economy, bad for Americans, and bad for the value of the dollar. Now let's put things in perspective. The U.S. dollar still commands 80% of the transactions in the world. Just think about that. If there are 100 transactions every day in the world, that's obviously a plug number. That's way too low. 80 of them are the U.S. dollar. 5 of them are the Chinese yuan, and 4 of them are the euro. And then everyone else's currency falls in below that. And so the dollar dominance in transactions is massive. And that won't be going away soon because the whole world's trade system relies on it. And the liquidity of the trade system relies on it. You can trade anything anywhere in US dollars because the market's liquid for it. And that is really good. The problem is that there's too many of those dollars out there. And that causes inflation. That causes debasement of the value of your dollar, of what your purchasing power is. And it causes all sorts of other issues once inflation starts going. Say you've got $1 million saved up for retirement. In that what's it at? You know what? I used to be able to do this calculation on the top of my head, but
it's basically 50%.
Yeah, but if you think about a 5% inflation rate in what's the rule of sevens? 7.2 in 5% inflation
years.
rate. Yeah. So in a couple of years, your value is devalued by half, and your purchasing power. You still have $1 million, but it buys, in half as much in present value, and that's not good. Not good at all. But before we get to all the harbingers of doom, Pedro, what the hell is going on in BTC?
That is a great question. BTC. Actually, speaking of the dollar, because I actually have the dollar. I want to go actually pull up my charts here real quick because these are this is a sophisticated trading system called, it kind of is. I mean, it's called Sierra Charts. It's got a lot of cool stuff here. But I just want to bring this up here real quick. This is the chart, and here we go. Boom. Of the US dollar and what's actually going on from you can see here that we had this huge rise up in September. From September I think came all the way back down, and it's just been skyrocketing. We went from $99 all the way up to $106 in a matter of 3 months, and or 107 altogether. That's a huge thing. That's a major move in the market.
What chart is this?
This is the US dollar. And so
compared to what?
Compared to other times in history. Like it normally doesn't do this. It normally kind of sits sideways and kind of chills out. But the problem is we're seeing a lot of, oh shoot, this doesn't have the it's not the continuous chart. Give me
Hold on one second. I'll be right back.
It's all right. Give me 1 second. I'll bring up the US dollar here real quick. And let me jump this back here real quick because to me, I think this is interesting based off of what we're seeing in the markets here. 1 second. Boom.
Because Anderson Cooper has to let the dog out in the middle of a broadcast. That's sorry. That's right. Just was. Go ahead.
That's okay. It's okay. This is 1 second. Here we go. You know Allison Cooper?
I know Alice Cooper.
Oh, I mean, not. Excuse me, Alice. You said Alice Cooper, or I'm sorry.
No. I was saying. I was referencing Anderson Cooper from CNN. I just had to get up and let my dog out to pee, and I was like, because someone famous like Anderson Cooper has to let his dog out, but I was joking.
Oh, I got it.
Us low-rated shows here don't have the luxury.
Hey, dude, we're growing. We're growing. We are growing. Do not,
Mr. Beast.
Do not
come. We're knocking at his door.
Yeah, man. I mean, listen. He went 10 years or almost 8 years before he even cracked. I think it was like a couple thousand. So, you know what? I think We're doing good. We do great content, and the stuff that we're going over is happening. So I think more than anything, that's what we're seeing. I apologize for the mess up here because I want to bring this up here real quick. I want to bring a BTC, and then we're going to go to the traditional charts. So this is the CME BTC chart. This is important because what I'm about to talk about with BTC and the dollars, actually we'll leave the dollar out for now, but I want to talk about BTC and then what is actually happening comparative to the spot market that we see in the crypto forexes or the crypto exchanges. Where are you? Why can't my eyes see this? Come on. BTC, there we are. Perfect. Okay. Hey. What's up?
Gotta get the engagement going. Might as well do it myself.
Yes. And guys, if you can, do us a favor and let us know, why aren't you pulling up? There we are. Come on. All right.
There you go.
Okay. I want to bring this up because it's really interesting. So right here, we started seeing the markets.
Remember, you and I are on the complete right side of the screen here. So if you're relying on something on the right,
thank you.
Fourth of the screen, we cover it.
I wish I could have two screens so I could show my full system.
You can. I can arrange that. We just need to program it.
Work with that. Okay. So you can see here that on this day right here, we're going sideways. Okay. This is the 19th. Okay. We're going sideways here. I think this is when. Then we push up and we make basically a new high right here. This was 3 days ago. This was on Monday. Okay, Monday. But you can see here we're going sideways. We go down right here and we push up. I'm going to show this here because this is kind of what's crazy. When you look at this, CME I think knew about the BlackRock situation because you saw
me something leaked. Come on, I can't believe it.
I know. Well, I haven't been on, so
can't believe something leaked.
I know, right. Something happened, something leaked, and literally you can see here, we see a push up, and then we see now it's screaming what we're seeing right now. But I want you guys to pay attention. We do not have any demand wicks. Okay, no buyer wicks, no buyer.
That over a little bit to the center of the screen.
Gotcha. Is that better?
Yeah.
All right, and I'll just make this bigger. So, boom, here we go. So the reason why I'm pointing this out is we had something similar like this, shocking. Here, you saw the same thing push when the market went back up to 30,000. Then we saw it come down, consolidate for 3 or 4 weeks. And then from there, we saw then rally back up. But there were no demand wicks, and they have to come in. So I'm not saying we're not in a rally. I'm not saying that what is going on, but what is saying is you can see right here, this rallied up and looks very similar to this. So it's going back up with no real institutions that are coming through and fighting to put that position in.
Right. They're
making quick money. And is this also maybe a flee to something because of war? I don't know. But I do think that there is a little bit of fear. So people are buying Bitcoin. But at the same time, I mean, if BlackRock is going to get in and really get their ETF taken care of, and that's going to piss off Caitlin. So, like, I immediately thought about her when I said, man, that is just wrong with what is going on with her, right? Like, they won't let her. And dude, and I think she should have something to say. I think she should go to Congress. I think she should talk to them saying,
she is.
This is, right? Yeah. Like, this is a good old boys club, and you're not letting anybody else. And honestly, I almost want to say, if she wants to get into that, she's going to have to fight, claw her way to the top. Like, there's no way they're going to let a female in that group unless you were born into that group.
Yeah, you got to be someone's daughter.
Yeah. So here, but you can see here the push up, boom. So the other group behind it as well. And now let me bring up.
Welcome, Carmen Crypto.
Oh, what's up, Carmen? How you doing? Hey, shout out real quick. Tell us where you're at right now, and what is your favorite instrument to buy in and hold? Love to hear that. What's going on? So you can see here real quick. Come on, thank you. It's real quick. Right here, you can see that the market, we had 2 days down here. Yet the mark, what we saw in the previous chart, it had gone up. We had 1 day down and then 1 day up. You can see here at these levels when we started exploding that the other chart started pushing up first. So it was really interesting that they pushed up. And granted, 2 days here is Sunday or Friday and Saturday.
Right.
Or Saturday and Sunday. So you can see here, this is what happened. But we started exploding 3 days prior on Friday. And you can see here on Friday, we were sideways. So it's one of those things that the traditional markets got leaked that they were going to get in. So and you can see that they didn't put any, they just immediately bought. They didn't try to even buy at a good level. They just try to buy so they can get the rumor. So to me, that's why I think this is a false rally again. Now, is it putting in new highs? Yes, it's putting in new highs now. So this is huge. Like I said earlier, that we have the 40,000 and the 39,000 area here, or 37,000 area here, right? This is a crucial point here. So we need to hit this, come back down, find support above 30,000. If we can find support above 30,000 with real wicks where it sells off below 30,000, and then we see them buy it back and start to come off of that 8-period moving average. If we can do that, right, then I think we do got a snowball's chance in HE double hockey sticks to maybe see a rally actually coming in, a real rally.
All right, so in the past few weeks, you and I, along with a number of other people on the great interwebs, were calling BTC lower, and that there wasn't just not enough volume to support what's going on. And you showed all the levels, all those lines there that where the buys are stacked up and ready to go. But from looking at your chart here, it doesn't really look like, except for the past 12 hours. Doesn't really look like the volume has come back at all. It still looks like the volume is very low. So it seems to me, in my non-technical analysis and my kind of fundamental view of things, that the market is still pretty weak for this stuff.
I agree. I'm not disagreeing, but here's the thing. I want my people to have at least an edge. I've already told them this looks like a false rally.
Yeah.
And when it comes to the volume, we had decent volume here. So it's not, I don't forget how to get rid of these things here. Where is it? Remove now. Give me one. I want you guys to be able to see that, but you guys can't see the volume here. Settings, trading events, latest news, mines, and that's it. Nope. Everyone knows how to do that, would be great. I always forget how to do this. I want to show this because it's really important. Here, Tom, if you could talk about what's going on with BlackRock and what's been actually happening while I'm trying to figure this out.
All right, so what's going on here? We
there we go.
The market kind of ferreted out that part of the BlackRock ETF thing is that they will be trading the iShares of it. That's the tradable portion of it for the public on NASDAQ. And those got listed either those got listed or someone made some really awesome fake graphics showing that they were listed. But since the market hasn't ferreted that out yet, usually that doesn't last that long. The market has been running around assuming that the ETF is going to be approved here. And let's not make any assumptions here about whether it has or it hasn't. The point is that this is, in my mind, a buy the rumor, sell the news type thing, and that everyone's like, oh my god, super FOMO pump, and it's pumping like crazy. And the liquidity still seems a little low in Bitcoin. The overall volume is low. Even just the volume from this chart you've got up here, Pedro, the volume of the past day or so is only like the average of what it was a couple of months ago. And it's not like the volume blossomed into some magical thing. It's just kind of had a regular day. But there were a few sellers, so the price pumped a lot. And so with the concept that and if you look at Twitter, the rumors are the SEC is just going to approve all of them at once. They're all good. If you look at other Twitter feeds, it's just like, no, just BlackRock, and they're putting $1 trillion into it on the first day, and they're going to buy $1 trillion in Bitcoin and blah, blah, blah. Let's remember, everybody, they don't have to custody exactly the amount of Bitcoin they buy. They just need to custody a lot of Bitcoin, which they've probably already bought a long time ago at a much lower price. So they don't need to probably buy anything at all. Plus, they can also create iShares and short them and sell them. so they could flood the market. They have to do that, right? They have to do pressure. They could put negative pressure on it here right off the bat, and everyone would be like, "Oh, this wasn't such a good idea." Let's not forget that spot ETFs exist in Hong Kong, in Canada, and a couple other jurisdictions, and they have not been this great massive windfall for Bitcoin. It wasn't like, when the one opened in Canada, it wasn't like all of a sudden all the Canadian pension funds just dropped billions of dollars in it and then Bitcoin pumped like crazy. It was just another thing for people to put on their radar to go, let's check out the risk profile first and see how it goes. Plus, it's a new thing. I don't care if it's BlackRock or Yo Mama or whomever. The first time you do anything, you don't bet the farm on it. So there's not going to be any big institution that comes in and says, "Well, this looks like a good fund, George. Let's put $500 billion in that fund there and put all the teacher salary pensions in that." That's not going to happen. They're going to be like, "Okay, BlackRock's new at this. I mean, they're not new at this. They do a lot of this type of stuff, but this is a new fund. The iShares are new. There's new types of arbitrage out there. Let's just sprinkle some money around in it." And so they'll call up, "Hey, Larry, we'll put the $10 million in that fund of yours." "Okay, thanks, Larry. See you at the club." Chunk. And so that's what's going to happen. So they're not going to get some massive amount of buying pressure on BTC. And I'm betting BlackRock already owns, and they're probably mining it too, all sorts of BTC. And they probably bought tons of it when it was at $15,000 in the last run. Or a couple of years ago, they probably when they were poo-pooing it and saying it was money laundering, they were probably buying it at $8,000.
It's exactly what they were doing. Honest to God, that's what they were doing. Let me put it like this. So the CME went long or opened up Bitcoin futures right here. Around this area right here. We saw a sell off the first day and we saw create new highs. Shortly after, this is when we saw, now this was the previous run, we were at 20,000. Then we saw the sell off of everything, right? And it went sideways. Okay, I bring this up because this potentially could be the same type of thing, right? BlackRock is big, very big, much like the CME. Actually, it's wondering who would have more power, right? If they were to go head to head. They're both powerful. It is like Mike Tyson and Evander Holyfield. Yeah. It's the same thing. Even though they do different things. So this right here is similar to me. BlackRock is coming in, boom. The key is that we're not seeing a real amount of volume coming in. They haven't dropped in $1 billion. Say $1 billion, but like you said, down in this level here. And additionally to that, as soon as they kicked in, the market went up or went down, then went up, then went down. I think that's what's going to happen here. This is going to be the part where they push up to push down, right? Because all these people are coming in with that FOMO, and I want to put it past BlackRock to sit there and say, "Yo, let's create some good news out there so we can get a lot of sellers come in, so we can get through." Because this right here, this level here is a strong level. That 40,000 to 37,000 mark area is a strong level. This is a monthly. It's a monthly. What's the word I want to use? Monthly supply zone. So us coming up into it and how we're setting up for the turnaround. So make sure you are mindful of that. And again, and to elaborate, or not elaborate, but just to point out again what Tom was talking about, the volume here. I know you can barely even see this amount of increase in volume right here, but this is what he's talking. This is what I thought I shut those things off. It's so funny.
I know, it drives you crazy.
Right, and yet somehow they get in. So right here you can see this is the volume that he's speaking about, comparative to, let's say, right here, we had these huge volume days, right? Boom, look how huge. Then that's real, and that's not even a tenth of what that. Maybe a tenth. I doubt it though. And when you look at when you compare it to the volume, and so I want to say that because breaking.
Hold on one sec. Crypto Rover says the iShares Bitcoin Trust has been listed on DTCC. The ticker of BlackRock Bitcoin Spot ETF will be IBTC. Another step closer. Thank you for that.
So it did then. I watched.
I don't know what the hell DTCC is,
but it's the iShare. It's the iShare. Hey, pull that up again. Let's pull it up here because we should be able to see it then here. The iShare BTC Trust has been listed on the DTCC. The ticker of the BlackRock Bitcoin Spot ETF will be IBTC. Let's see here, iShare Spot. Other have it here. Wrap. Here we go. It just went live here. And shocking. It went, oh, no. Am I tripping here? Spot. Yeah. Oh, no, it's Uniswap. I don't know if this is the correct one.
What platform is that?
This is just... all this is, I get it. Somebody just went through and created this. Let's do all IBTC $. And let's use also bond. I share Bitcoin. What day is this? Nope, this is September. Yeah, somebody was trying to do a rug pull there. IBTC. Yeah, it's not here yet. They'll bring it on. I'll be tracking that then. That'll be something that I can track and put on. Thanks for sharing that. Either way, I feel as if Sam Altman. Here,
I got a CoinDesk article up that says Bitcoin in anti-gravity phase as ETF approval nears finish line.
Yes, it's going to be really interesting to see what actually happens here. But you can see here they started pushing up on Friday or on Thursday here. So something was leaked, something definitely was pushed up. So it's really interesting. Just sit there. That's crazy, man.
All right, let's take a quick social media break here, ladies and gentlemen. If you are watching on, watching us at all, watching the live stream is what I meant to be saying here. Give us a comment, give us a shout out, give us a like, give us a share. Just hit that share button, and do what you can to help us out. We're trying to. It's not that they say we need to beat the algorithm. We just need to get the algorithm to know that you're interested in it, so it recommends us to similar people as yourself. And so drop a comment, and in that comment, drop where you're coming from, where either you're watching from, where you live, or where you want to live after you make it rich in crypto. And so let us know all about that. But Pedro and I are going to talk about the economy here in a minute when we come back.
Yeah.
I am going to talk about our sponsor for a minute. Thank you, ladies and gentlemen. Auditchain, in the business of auditing financial statements for anyone that reports electronically to a public oversight committee like the SEC or the one in Europe and all that type of stuff. And their software that's blockchain based can do things that fleets of accountants and auditors used to be able to do in weeks. It can now do it in minutes and determine where your company has filed incorrect papers. And it's something like it's running right about 30% of companies make egregious errors on their filings, which is amazing. There's companies that make $1 billion. There's companies that file their financial statements in which their balance sheet doesn't what? Balance, right? Anyway, as I always say, instead of listening to me pontificate about it, you're going to listen to me pontificate about it.
Most of you know that crypto exchanges have been taking a beating about transparency, and many groups out there are trying to solve that. But Auditchain has already done that. Auditchain's protocols and network of validators can mathematically prove that a company's entire financial state, not just proof of reserves, but a proof of state, and whether or not that company is providing accurate reporting and information to the respective government regulators and to the public. Seriously, you and I can check crypto companies and traditional companies' financial reports for transparency and accuracy using a logic and reasoning engine called Patchouli that records its output where? On the blockchain. Seriously, ladies and gentlemen, blockchain technology is now able to be used to check on traditional companies. Behind me is a list of companies that compromise the S&P 500, S&P 100. In essence, the largest U.S. companies by size. More than one quarter, 29 out of 100 have problems with their report. Remember, accounting and other corporate systems are garbage in and garbage out. So if there are problems with the data out for these companies, in red here, what does that mean? That's right, ladies and gentlemen. There are problems with the data going in. And this was figured out not by accounting or auditing firms and fleets of consultants. This was compiled and reported on by Auditchain's Patchouli validating nodes and took only 5 minutes. It's revolutionary and it's a disruptor technology. Auditchain.
Back that far. Shh.
All right, ladies and gentlemen, thank you very much. That's Auditchain, auditchain.finance. Go over to their website, links to all their social medias, links to their white paper, and links to all the good things going on with them and how you can learn to participate, how you can learn to run companies through their system and audit them on your own. And I think, and to be honest, I think they're going to start paying people to do it too, because there's so many companies out there they can't get to them all. So I think they're going to have a bounty program to do that. Anyway, Pedro and I are talking about, as the title of the show says, the Harbingers Cometh. And as I say in my great Aaron Sorkin writing ability, I'd leave it a little mystical like that. But what we're talking about is just the bad news going on with the U.S. economy, and not necessarily the actions of the people in the economy itself, but the people that are overseeing it and trying to make it run smooth. I think I even saw Jamie Dimon, a quote today on CNBC over here, say that the central banks are doing exactly the wrong thing right now. And when those two, when the big banks and the Fed are at odds with each other, you know there's a problem. That means even though the Fed is an independent body, that means the politics is leaking into it, and that's not good. Not good at all. And it's not good at all because the rates are going. This is the 10-year Treasury note I got on here. But Pedro, you've been watching the bond market pretty heavily. What's going on with that?
Yeah, it's really interesting. So now what I'm going to show two different types of charts. So one of the charts I'm going to show is an interest rate chart. And so that interest rate is basically right here where you can see it's like 4.87. On Monday, we actually opened up and it was a big news where we saw that the market went up first. And it was the first time since 2007 where we saw the interest rate reach 5.2%. 5.02%. This was an indication of a very soft market, because you think, well, no, interest rates are great. Well, the problem is that the higher, so the lower you put in your money into a bond, right? The shorter time, the lower interest rate you should have. Versus the longer you leave your money in something, you should have a higher interest rate, right? It's because it pushes people to go through and buy the market or buy that bond because your money's held for longer, so they want to get a better yield. So to say that, you saw here for the first time, well, this has been happening in particular, but the 30-year and the 20-year bond or interest rates have been fluctuating and becoming, whereas the 20-year actually drops below, or it goes above what the 30-year would do. So you can sit here and see like the high is 51.70 on the 20-year and 30-year. You can see here that there is a difference here. Right. So as we're seeing the actual movement of the market, you can see here on the 10-year, the 10-year hit for the first time that 521, but it was very much higher than everything else at that time, which brings an inversion. This is, I mean, this has happened in the past, but that signaled that we were going to see the market drop, and we did. That's exactly what happened in 2008. So we're the narrative, we're telling the same story, like literally in the charts and in the economy, versus what they're telling us on TV, in a sense, right? Like, hey, everything's great, don't worry. You know, Biden sitting there saying, hey, don't worry, America's great, we can fund that war, we can fund this war, we can fund that, every war, it doesn't matter. You know, we're strong as bull. And from a
Janet Yellen actually said this, the Wall Street Silver Post. She actually said this: while we are running deficits over $2 trillion per year, U.S. can afford to fight 2 wars. We can't afford to do anything if we're running deficits of $2 trillion a year.
Well, there were economies that did that in the past. Rome, before it fell. I believe Babylon was overextended itself. It had a big fall. Oh wait, the UK did as well. Yeah, and they fell.
Weimar Republic too.
Yeah, like we can go back in history. The only thing I can think of is that our institutions are in league with the US government, and so if they need to tap on a door and say, hey, we need some money, that's the only thing I can think of them doing, and they'll say okay, because they get economic reports before everybody else does. right before it's actually
the market.
Exactly. And so it's the only way I can think of, like, they know how to play. And I think it's been beautiful how they actually set it all up, right? It's like, well, they basically always do have through the markets, through everything else, they have the money to be able to make money, you know, and they have a system to print money literally outside of the money printers because of the markets and how they set things up. So it's really interesting to see how it's going to happen. So it's really interesting for me when I look at this. Then when you look at the actual bond markets, here we go. Here's the 10-year bond. 10-year bond is still, I could only imagine being short. Like, I know there are people who are short, but they've been short since 2012. Or excuse me, not 2012. 2020 here, man. Watching this fall here, boom. This is hundreds of billions of dollars, if not trillions of dollars being made. Like we see these huge push-ups. But again, every time I always teach you guys, right? If we see a big push-up with no demand wicks, which we didn't see any demand wicks up in this level, or as we started pushing up, they put the initial shorts right here, they let it go back up, and then they finished off their position right here before they started the initial drop. So their cost base on that short is right here. You can see drops down, comes back up, and they actually reestablish and put in more of the shorts on the bond here on the 10-year when they just dropped. So it's just like, I just sit in amazement. First of all, that this went this far, but then how far will it go, right? Like, are we going to see it at the 105? It could go further. My chart doesn't allow me to go further than this, but actually right here, could it go down to even the 95? That would be nuts. If this goes to 95, that means that we have an interest rate of $10 or 10%, 12%.
Well, that's not gonna be good.
Listen,
that's not going to be good
we
at all.
saw that in the 70s. Did we not? Like,
we did, but we didn't have the budget deficits that we do now as a percentage of GDP, or as a percentage of the overall budget. Let's forget about GDP for a minute. I think I heard them talking about 40% of the income for the U.S. government is going to be going to pay interest in the 2024 budget. 40%. 4 out of every $10, 2 out of every 5 is going to go just to pay for the stuff we did last year and the year before and the year before and the year before that and the year before that and the year before that. It's got to stop. And as soon as you talk to any politician, they're like, we can't stop because the other guy says, oh, you're cutting Social Security. We have that going on here in Canada right now. The government, the current government spent way too much money. Now, obviously, a lot of it was in COVID, but they've also triple spent on social programs and things like that. And they added like 33% to the federal government employment rate, like added tons of positions. And so, as you may suspect, inflation's going crazy. And so now they're like, well, we gotta rein in spending, and the opposition party says, okay, we gotta stop spending so much, and then the current government immediately just gets on TV and says they're gonna put old ladies in the street, and so we have to keep spending $1 trillion extra a year, and if you don't, you're gonna just put old ladies in the street. I'm like, that's not how this works, but no. That's how the media picks it up and runs with it, even though the media knows that that's not true. They know that when people come in, they don't put old ladies in the street. They go back and they turn down every program. They say, we need to cut 10%. Every department cut 10%. And that's what happens. But when you have the media run with it too, and the same old story, you're going to put old people in the street, you're evil. Drives me crazy. Anyway, sorry to interrupt.
No,
what's the dead clock there?
Yeah, so when you look at it right now, we're at 33 trillion for US debt. Now, this has actually been kind of climbing, which is kind of good. Maybe because we turned on the war machine and they knew they were going to, or maybe not. I don't know. I mean, I don't know if there was a planned war or not. I don't know. But
the website is usdebtclock.org. I don't know if if you're watching this on the phone, you won't be able to read any numbers. But if you've got it on your big screen, like a couple of us do, viewers do, like Chuck in Oklahoma and whatever your name is, Ryan in Perth, Australia, you watch it on the big screen, you'll be able to see this well and be able to see that we're spending too much money.
Yeah, a lot. And the reality is that it's still not it's not as quick as our debt clock. So that's the issue, right? Like when you look at the debt clock, actually I haven't looked at this in about a month. Let me look at this just to make sure. Actually, we are we are. Okay. Yeah, this is why I'm sorry. I'm checking out right here on the hundreds, thousands, because when you look at this, what I try to do is I look at here in conjunction with the hundreds of thousands and which one is popping first, right? So you can sit there like 5, 6, right? Boom, 5, 6, 6, boom. So we're moving quicker.
If you're looking at the chart in the bottom right, I'm covering it with my super buff body here.
Yes. So right here, you can see between the two, right here versus price here.
I don't think we can see your mouse.
Oh, you can't. That's weird. Okay. That's weird that they block that. It's weird how certain things that they block, certain websites. I'm like, why would you want to block that? That's the other thing I always think. Like, why are you blocking that? What's the point of you blocking that? Oh, yeah, because you don't want people to point out. So if you look where all the green is, okay, you can see where it says U.S. gross domestic product. This is basically what we produce and what we sell to the rest of the world and how much money we're bringing in. If you go over here to the national U.S. debt to the far left, upper far left, you'll see here that this is what we actually have the initial cost of our debt. The real U.S. debt is actually down below here where the other part of the red, which says U.S. total debt, that's actually $102 trillion when you calculate everything.
Yeah.
And then if you really want to get scary, the U.S. unfunded liability, that in itself is stuff that we got coming in the future, like people's pensions, the government workers,
just in Chicago, debt. The unfunded pension number is in the hundreds of billions just in Chicago. I can't imagine adding up everything else in the U.S. Anyway,
Social
Pedro,
Security.
we need
Yep.
to start wrapping up the show here today. One of the things that we're have been talking about today, as the title of the show was "The Harbingers Cometh," is that we've been talking about the bad news going on, the subtle signs, meaning the headless horseman is riding in on the and to chop your head off. Coming in, and one of those is what the U.S. government pays for its debt. And one of the reasons why they have to pay more for it is because other people don't see the U.S. government bonds as that safe. In perception in the bond market is pretty much the whole game. People look at all the factors and say, oh, the U.S. government's going to owe this much money. They're trying to spend this much money. That's not good. There's a higher chance of default or them having to devalue the currency of some sort, which would make our bonds worth less. So we need a higher, and if you want us to buy $10 billion worth of your debt, then you need to pay a higher rate to get us to do that and take the risk. So that's one of the basics out there for that we've been watching. Specifically, Pedro's been keeping an eye on it a lot, thankfully, because I have not, but I recently have been because of talking about it on the show, and it really scares the crap out of you. It scares the crap out of you because you could get to a point when the Fed goes to the market and says, all right, the U.S. government, we need to buy all these bonds from the Treasury Department, and the rates don't work out, and then they go to the public markets too to unload them. And there's not enough people buying them. People that buy our bonds are South Korea, China.
China stopped.
Yeah,
China's actually
they basically stopped, and they were they're selling them, but I think Tether's buying billions of treasuries from China. I think Tether and frankly Circle is too. I think they're buying Eurodollar treasuries already offshore, which is a good thing. It's good to get them out of China's hands and into a stable coin thing also, and it keeps the market from being flooded. But that's, I don't have any insider information. Trust me, I am not an insider in any of that market. It just seems like that's happening because Tether all of a sudden increased the billions of dollars that they own in U.S. treasuries, but the Fed said they didn't buy them from us. The Treasury Department said they didn't buy them from us either. Anyway, I digress. And then this debt thing here is a problem too, and we see the inflation going up too. Ultimately, if you think about it, inflation is a good thing for debt because it makes the value of that debt less over time. I mean, we could turn our $100 trillion in debt into $50 trillion in debt, and the equivalent of $50 trillion in debt by letting inflation run for a little bit, which is great for the debt, but it's bad for our purchasing power because we get screwed too. As we can see, the price of eggs are now at $69 an egg instead of $4 for 2 dozen. And so these are the harbingers that I'm talking about. The early things that say, everyone says, hey, that's not good, not good at all. And then when you have someone like Janet Yellen, who is supposed to be a wizard, getting on and saying, we can fund two wars while we're in debt, is crazy. And what did somebody else posted here today? This guy, Luke says, I went live on my podcast, claimed that 80% market crash in terms of BTC would occur within 5 years, and that bonds were the weakest asset. Now, just 269 days later, U.S. Treasury bonds have fallen 60%. And he says against, and it doesn't say against what, but hey, we got thanks, Livid Platform. Hey, I'm sorry for bothering you. I want to offer promotion for your channel, viewers, followers, views, chatbots. Well, thank you for the engagement, Livid Platform, but YouTube will ferret that. If I were to buy likes or views or something like that, first of all, I'd have to buy them for every video to be consistent, and then YouTube would demonetize me and take the 67 cents I earned last month back.
Whoop, whoop. We're moving up.
Up from 50 cents. Anyway, Pedro, that's I got an 11 o'clock hard stop here. That's all I got. All I got today for that. We could talk about this endlessly forever, but keeping it brief and all that. gives our viewers a break, but also allows us to keep more topics open for the next time. I will not be. We will not be here tomorrow. I've got some real-world live streaming to do for a group called Startup Canada. They got an all-day event, so tomorrow is set up, and then the event is Thursday. I may be able to put this together for Friday, depending on where I am. So Pedro, thanks for doing your stuff today. Appreciate it. Any last words here before we go?
Hey guys, stay strong. I would tell you to save money, but if you save it, guess what? You're missing out because inflation's kicking in. So put the hard money to work and figure out a way to stay ahead.
Like I always say, everybody, like, share, comment, send this thing around to help the algorithm push this product, this video to other people similar as you and to your tastes by liking it, sharing, and whatever. Do that. If you're watching this on the replay and you got this far, I know there's not a lot of you, but a couple of you do, I can tell. Then you are a very special person. So thank you for watching. Appreciate that. Ladies and gentlemen, thanks for watching. My name is Tom, otherwise known as Striking, here on the DYOR Media Network and across the digital asset sphere of influence around the world. I'm going to use the best hyperboles ever here. But anyway, thanks for coming. We'll see you either Friday or next week on behalf of myself and Pedro Garcia, the crypto chart analyst.
We forgot. Shiba Inu.
Shibu. You got to say that so the YouTube algorithm here is. Zach Humphrey, Shiba Inu, yoo-hoo!